The Federal Reserve message is clearly and unequivocally hawkish. The minutes coming from the FOMC and what Jerome Powell said show us that there is no other way for the Federal Reserve than to remain with the current policy for a number of reasons. Number one, the Federal Reserve is loss-making. Number two, the fiscal imbalances of the government are way too large and put at risk the US dollar in the long term. Therefore, the Federal Reserve needs to constrain policy in order to keep the dollar as the world reserve currency and to avoid destruction of the confidence in the currency issued by the Federal Reserve. Furthermore, what the Federal Reserve also needs to understand is that with the current level of unemployment, even if it's nothing to write home about considering the labor participation rate or the employment to population ratio, with that level of unemployment, with the level of economic growth, even if it's bloated by government spending and high debt, all of those factors do not show that the Federal Reserve has to pivot. Furthermore, even if we look at monetary aggregates, the reduction in money supply is evident. However, a lot of the money supply movement has gone to money market funds, as Professor Congdon shows. And going to money market funds, if we look at the balance of monetary aggregates with that figure, then the level of money growth is not that small. Therefore, the Federal Reserve is likely to remain hawkish, and we must adapt our portfolios to that reality.